Welcome to this in-depth exploration of GameStop, GME, stock. In early 2021, GME stock became a trending topic and a major focus of attention in the financial world. With its astronomical rise, wild swings, and epic short squeeze, it was a rollercoaster ride that captivated the attention of investors and non-investors alike. But what was driving the hype and volatility of GME stock? And more importantly, is it a smart investment? In this video, we'll take a deep dive into the world of GME stock to answer these questions and more. The rise of GME stock. To understand the hype around GME stock, we need to go back to its origins. GameStop is a retail chain that specializes in video games and electronics. In early 2021, the company was struggling financially, with declining sales and mounting debt. This led to a short interest in GME stock, which is when investors bet against a stock's success by borrowing and selling shares, with the hope of buying them back at a lower price and pocketing the difference. However, a group of retail investors on the Reddit forum Wall Street Bets saw an opportunity. They believed that GME stock was undervalued and that the short interest was too high. So, they started buying shares of GME stock en masse, driving up its price and creating a short squeeze. A short squeeze occurs when investors who have bet against a stock start buying shares to cover their losses, driving up the price even further. This, in turn, attracts more buyers and creates a feedback loop that can send the stock soaring. And that's exactly what happened with GME stock. The volatility of GME stock. The rise of GME stock was nothing short of meteoric. From January 1, 2021, to January 28, 2021, the stock rose from around $17 to over $300, a gain of more than 1,600%. This was unprecedented in the world of finance and made headlines around the world. However, the volatility of GME stock was equally stunning. On January 28, 2021, the stock had an intraday high of $469.42 before plummeting to $112.25, a drop of over 75%, before closing at $193.60. This kind of volatility is extremely rare and can be attributed to a number of factors, including the short squeeze, retail investor frenzy, and algorithmic trading. The fallout from GME stock. The hype and volatility of GME stock had far-reaching consequences. On the one hand, it made some investors incredibly rich. Those who bought GME stock at the right time and sold at the peak made millions of dollars in profit. On the other hand, it led to significant losses for others, particularly hedge funds that had shorted the stock. The fallout from the GME stock frenzy also led to a number of regulatory and legal actions. The SEC launched an investigation into potential market manipulation, and several class action lawsuits were filed against brokers and trading platforms for their handling of the situation. Is GME stock a smart investment? Now that we've explored the hype and volatility of GME stock, it's time to answer the question that's on everyone's mind. Is it a smart investment? The answer is not a simple one. On the one hand, GME stock has come back down to earth and is no longer experiencing the astronomical rises and falls that it did in early 2021. This means that the short squeeze that drove its rise has largely dissipated, and the stock is no longer in the spotlight like it was before. On the other hand, GME stock still has potential. The company has undergone a significant transformation in recent months, with new leadership, a revamped e-commerce strategy, and a focus on expanding its product offerings beyond video games. This has led some investors to believe that GME stock is undervalued and that there is room for growth in the coming years. Additionally, GME stock has become a symbol of retail investor activism, and the company has a dedicated following of investors who believe in its mission and want to support it. This has led to a groundswell of support for the company, which could translate into increased sales and growth in the future. So, is GME stock a smart investment? It depends on your investment goals and risk tolerance. If you're looking for a stable, long-term investment, GME stock may not be the best choice. However, if you're willing to take on some risk and believe in the potential for growth, GME stock could be a smart investment for you. It's important to note that investing in individual stocks, particularly volatile ones like GME, comes with inherent risks. It's always a good idea to do your own research, consult with a financial advisor, and only invest money that you can afford to lose. In conclusion, The hype and volatility of GME stock were unprecedented, and the fallout from the frenzy had far-reaching consequences. However, when it comes to investing in GME stock now, the answer is not a simple one. GME stock has come back down to earth, but it still has potential for growth and could be a smart investment for some investors. As with any investment decision, it's important to do your own research, consult with a financial advisor, and only invest money that you can afford to lose. The world of finance can be unpredictable and volatile, but with the right information and guidance, you can make informed decisions that align with your investment goals and risk tolerance.